Today, we are covering real estate contingencies for the national portion of the real estate exam. A contingency is essentially a condition that must be met for a real estate contract to remain legally binding. From an exam perspective, think of these as escape hatches that allow a buyer to walk away with their earnest money intact if certain events do or do not occur. The most critical thing to remember for your test is that a contingency makes the contract voidable by the party the contingency is intended to protect. Usually, that is the buyer. If a contingency is not satisfied within the timeframes specified in the contract, the buyer can typically terminate the agreement without being in default. One of the most frequent contingencies you will see on the exam is the financing contingency. This clause states that the buyer's obligation to purchase depends on them securing a mortgage at specific terms. If the buyer is diligent but their loan application is ultimately rejected, they can exit the contract and get their deposit back. The exam will often try to trick you by suggesting the buyer is in breach of contract if their loan fails, but as long as the financing contingency is in place, they are protected. Pay attention to the distinction between a pre-approval letter and a formal loan commitment, as the contingency usually hinges on the latter. Next, we have the appraisal contingency. This is closely related to financing because lenders will not loan more than the appraised value of the home. If the appraisal comes in lower than the agreed-upon purchase price, this contingency gives the buyer the right to renegotiate the price, pay the difference in cash, or walk away. On the exam, watch out for questions regarding the difference between the sale price and the appraised value. The appraisal contingency is what manages that specific risk and prevents a buyer from being forced to pay significantly more than the home is worth according to professional standards. The inspection contingency is perhaps the most common source of negotiation during the home buying process. This gives the buyer a set period, often called the due diligence period, to have professional inspectors evaluate the property. If major issues are discovered, the buyer can request repairs, ask for a credit, or terminate. A common exam trap involves the timeline. If the buyer does not provide written notice of their dissatisfaction within the allotted timeframe, they may be deemed to have waived the contingency. This is where the phrase, "time is of the essence," becomes extremely important. You must understand that missing a deadline by even 1 hour could mean the buyer is forced to move forward despite finding serious defects. The sale of other property contingency is a condition where the buyer's purchase is dependent on them selling their current home first. Sellers often view this as a high-risk contingency because it creates a chain reaction of dependencies. If the buyer cannot sell their home by a certain date, the contract can be terminated. From an exam standpoint, remember that this is often the hardest contingency for a buyer to get a seller to accept in a competitive market. Finally, we have the title contingency. This ensures that the seller can provide a clear and marketable title free of undisclosed liens or encumbrances. If the title search reveals a cloud on the title that the seller cannot fix, the buyer is not obligated to proceed. To remember these 5 major contingencies, use the mnemonic FAITS, which stands for financing, appraisal, inspection, title, and sale of other property. If you have FAITS in your contingencies, you have a way out of the deal. The exam will frequently test your understanding of how these clauses affect the status of a contract. Remember that until contingencies are cleared, the contract is technically executory. Once they are cleared, it moves toward being executed. Always look for the specific dates in exam questions, as missing a deadline is the most common way a buyer loses their contingency protection. If a buyer fails to act, they are essentially accepting the property as is regarding that specific condition.